got very good arms.
He didn't fall? Inconceivable. You keep using the word. I don't think it means what you think it means.
Welcome back to Thinking Critical. This is Wes. We've been keeping up with the IDW situation here on the channel for the last year. The fourth quarter reports came in, and the final fiscal year 29 reports came in. And I wanted to talk to my good friend, my industry insider, Perch. How you doing, buddy?
I'm doing well. How about yourself?
Oh, we're doing pretty good. You know, we wanted to talk about this last week, but you had a trip. We didn't quite get it in. I ended up recording a version of this, but the audio was all screwed up. But, you know, happy accidents. You're back now, and we're going to dig into this. First, I'm going to read the article covering it on icv2.com, you know, and then we're going to kind of break this down. Does that sound good, Bert? Good,
That's
Perch?
perfect. Yeah, let's go into the IDW situation. Perfect.
IDW Media Holdings continued its large-scale losses in fiscal quarter 4 ended October 31, capping off a year of increased sales and declining losses, the company announced on Thursday. IDW Publishing, which includes comics, graphic novels, and games, lost $800,000 in fiscal quarter 4 and $5.2 million for the year on flat sales in quarter 4 and declining sales for the year from $21.9 million in fiscal year 2018 to $20.1 million in fiscal year 2019. The $800,000 loss for publishing was flat with fiscal quarter 4 2018, but the earlier part of the year was tough. The $5.2 million publishing loss for the year was up substantially from the $3.4 million loss in fiscal year 2018. The entertainment division delivered V-Wars and most of October faction episodes to Netflix in the quarter, with legacy production agreements producing major losses of $17.2 million on higher revenues of $22.6 million. After the remaining episodes of October faction are delivered, which will produce additional losses, Locke Key is up next, which the company expects to be profitable. IDW Media Holdings, which includes the entertainment, publishing, and CTM divisions, lost $26.4 million for the year, an improvement from $36 million loss in fiscal year 2018 on revenues of $62.6 million, up from $58.7 million in fiscal year 2018. Plans for the year include an effort to move IDW from pink sheets to a major exchange and another capital raise. The company is also promising a turnaround and a return to profitability in all divisions in fiscal year 2021, according to CEO Howard Jonas. So there's a lot of boring stuff right there, you know, a lot of financial talk, but it's really interesting. They're still losing money. They've been losing money for years. You know, IDW is in such terrible shape. They have not been able to borrow money because of their credit rating for like 2 years now. What are your thoughts on this, Perch?
There's a lot to digest here, but and for a lot of people, I mean, the financials and kind of the numbers and things that come out, it's very hard to dig through if you're not familiar with how these companies work and what just basic terms mean. Like, what does revenue really mean? Well, loss mean in this case? What is debt, and how does that impact things? What is what are they trying to go for? What's the point of this company and what they're shooting for? It's, you know, and then what's EBITDA? Why is EBITDA such an important phrase to them, and what does that even mean? You know, IDW as a company, their goal or their aim is to try and become a media company. They're not trying to become a common comic company. They see themselves as a vehicle to taking projects, getting them kind of created, delivered, curated, and then serving them up to streaming services and other entertainment venues. They've pivoted a little bit over the last 2 years, like almost everyone has, at really aiming for the Netflix and Amazon Primes and people like that of the world, as opposed to you know, extended networks and cable. But they've now gotten to a point, I think you referenced it, they're putting all of their eggs in that basket. And not necessarily by choice, although I'm sure this was partially a business decision for them, but because they're backed into a corner. That's really all they can do now in terms of the amount of money that's outstanding. I mean, the most unhealthy part of their business, if you look at their financials, unfortunately, all this stuff is published. You can see it on their media holdings page. They just have an amazing amount of debt, and they've converted some of their losses into more debt, and they're having a really hard time raising any more money. They've already done a couple rounds as a small company. They are, you know, and they're growing, but we'll talk a bit about how small companies are expected to grow to have big results. IDW doesn't fit that profile. So we're kind of entering this make or break year for them in many respects.
Yeah, so we talk about them putting all their eggs in one basket. They really wanted to get into the streaming and the network game, like DC and Marvel have done, and so some other, Mark Miller, most notably, has his own deal, but they didn't really have the IP ready. But they decided to gamble on themselves. They invested a ton of money, and they footed the bill for all of these shows in house.
Yeah.
Like they weren't co-produced. I believe maybe Locke and Key is, but the first shows, Winona Earp, V-Wars, October Faction, they took on all the bill and all the risk. There was no risk mitigation from any outside publishing house or distribution center. And it's really come to bite them because they just didn't have the IP that was ready and recognizable for people to just jump on board and be popular.
Well, yeah, and I think that strategy would make sense if you had a hit on your hands, if you had something that was going to take. But unfortunately, Winona Earp has had a run, but they've struggled a little bit. They've had to give away a lot of the rights and just getting it renewed or getting it to other places now. But you mentioned V-Wars and October Faction. Granted, it's a little early, but neither of those shows, maybe I've missed October Faction, but V-Wars has not been renewed yet. And it's questionable if it will be. I would suspect at this point, if we haven't heard anything, it will not. They were hoping for that Umbrella Academy-like success with Netflix. They put it out on a time when there wasn't a lot of content out. They were really shooting for that kind of, shoot for the moon kind of approach to their earnings. And if that had worked out, then taking on those expenses would have kept, they basically would have kept all the revenue coming in, or a lot more of it. They would give away less of the deal, have less people to pay out, less partnerships, less place to divide up the money. And if you look at their balance sheet and where their debt is, they needed that. They needed that hockey stick-like growth, but these shows aren't going to give it to them. They're now with Locke and Key. Locke and Key, I believe you are correct. They did do some sharing with that. So I think there's an expectation Locke and Key will be profitable. But then they're not getting the same upside they would have for those other shows.
And the thing about that is, they did have some risk mitigation. I believe Netflix took on some production costs, so they marketed the show because they had some skin in the game, but they didn't have any in the other shows, and they weren't marketed.
That's exactly right. No, V-Wars had very, very limited marketing. It was basically if you were inside the product, you'd see things with V-Wars. They did a couple push notifications on it. Same with October Faction. Locke and Key, completely different story, and that's the name of the game. I mean, this sounds sad, but if you're an entertainment company, if you're Netflix and Amazon, a streaming service like that, yeah, you're going to market the things that you have more revenue opportunity to, and you're going to treat the rest of it like Remnant, and that's the risk you're playing. So IDW was gambling that V-Wars, October Faction would do really, really well and get word of mouth outside of Netflix, and they'd be able to kind of succeed despite what was happening with marketing. Locke and Key does look like it's going to be a success. I believe I've heard at least some rumors. I'm not sure if formal word has come out that we will get a season 2 of that. So it's very early. I mean, it just launched, but it tells you also when Netflix believes they've got a marketable hit that they want to get behind, they do a renewal, within 48 hours of the show dropping. And the fact that we do not see V-Wars and we do not see October Faction getting that, I mean, a lot of the statement that was made on IDW was really kind of counting on the fact that those shows would get picked up again, and it certainly doesn't seem that way. So I think there's, like I said, Howard Jonas is counting on these things hitting. They've structured their business in such a way, and they've been telling, I'm sure the investors and the people are holding on that own parts of the company that this is the path. But if Locke and Key is their first actual hit, so to speak, but they don't own many of the rights, it does not help them as much as it should. Unless they have 2 or 3 behind it, then it goes back to what you say. They just don't have their own IP.
One of the things, I hear some speculation that maybe, cut your losses, put your focus on your comic book line and build it up there. But the problem is, even if their comic book publishing line was profitable right now, which it's not, the profits wouldn't be enough to put a dent in that massive amount of debt. Isn't it like $200 million?
Yes, that's correct. I mean, yes, it's over $200 million.
It wouldn't cover the interest.
It would not, and that is a trap a lot of small companies get into. Is so if you're a startup, and IDW is by no accounts a startup, but they're behaving in some ways like one. What they're doing is they're taking on debt and they're making risks, and they're doing that and they're telling investors, hey, in the next 3 years, it's going to pop and you're going to get a massive return on investment. Now, fair or not fair, a lot of investors have only that amount of patience. They've got 2 to 3 years worth of patience for their money, and even 3 years is stretching it a bit. So you've got to hit fast and grow, especially the way IDW is positioned. So Howard, he's promising this quick return. We're going to do this. He's saying astonishingly, we're going to be profitable in 2021. Profitability for all divisions in fiscal 2021. That would be a miracle, honestly, with the way things are going. But hey, if everything hits right, great. Unfortunately, profitability does not win because, like you said, one, they've got so much debt and interest, it's just going to claw away at them. And number two, their investors are hoping for not just profitable, they're hoping for a massive return in 2021. That's not going to happen.
Yeah, and it sounds like they're going to putting their business on a new stock market. Like there's really nothing to generate there. I don't understand the idea behind that.
Well, and not to get too nerdy with it, but so, it's a path for small companies, especially if you go outside the US to one of the other global NASDAQ markets, where you can put your company there, and it basically gives you the ability to raise money through stock to, untraditional investors, to different people. And it's a way you can do it. Unfortunately, people are going to take a look at the company's value and it's flat.
Awful.
Yeah, exactly. It's not a healthy value. Even the average investor on the street is going to put money in. I mean, for example, it would be like you putting money into a company just through the NASDAQ, through the international market. If you're going to put $200 in, you're going to have an expectation that in less than 12 months that $200 is going to be worth $400. Whether that's fair or not, you're going to expect that kind of growth for yourself. That's really not too much different than going out into the market and finding it from investors. It's just at a smaller scale. And the other problem with that is if you do major deals or you do big things, people will take their money back out. If you put $200 into IDW and suddenly they score a deal with Netflix, they get a renewal for V-Wars unexpectedly, and the stock goes up double, that sounds great. You're going to sell off. As soon as you sell off, that price is going to go right back down again. So you're trapped in this cycle of never getting that huge growth that you need. And why do you need that huge growth? Well, you want to be rich, but also, like you said, they've got this giant bag of debt on their back that they cannot get rid of. And that's got to be addressed sooner or later. They're in a trap situation. Now, a lot of people have given videos like, oh my God, IDW is going to vanish tomorrow. If we talk about the end game, it wouldn't go that way. But the clue is in kind of the last sentence from Howard Jonas in that ICD2 article. IDW may incur restructuring expense in fiscal year 2020. Yeah, no kidding. It's definitely going to incur a lot of restructuring expense because so much of their business is now built on the fact that these shows have to be renewed, and at least 2 of the 3 won't be.
Also, they're having to leverage like rights and percentages of the ownership of the show just to get them produced now.
Right.
So every step that they take down this, even if it hits bigger, they're going to be getting less and less back. And it also has to go back to the investors themselves. Yeah. How is this? How could this potentially? Do you see this long-term affecting the publishing line? Which is going to be of most interest to my viewers and your viewers.
Yeah, I think, the reality is what they could do from a publishing standpoint, since they have geared the majority of their company. And if you look at their balance sheet, their publishing division is it's boring for all intents and purposes. It's very flat. It's trucking along. That's not where the big money is. That's not where the incoming or the out is. You look at kind of their losses. It's very, in terms of millions of dollars, by the way. So it's like, it's only $5 million instead of 20. Who cares? But from a publishing division side, it's much easier for them to quote unquote save. But the way you would do that is to probably detach it. And I think something that IDW could do, and especially if things get bad and they're trying to make up for their investors, they say, all right, we're going to write off or we're going to sell off or detach the publishing business. we're going to keep a percentage for publishing comics to be entertainment vehicles, and we're going to take a part in that, but we're going to detach ourselves from that. Publishing division then proceeds to cancel any of their licensing deals or use that restructuring as a way to blow off licensing deals that aren't bringing them a profit. And suddenly they're a boom or a ball. They're a small little publishing arm. They've got an existing relationship with Diamond, and they continue on that way. IDW as a corporation would be able to remove some of the losses from their books, and they could, they could do it that way. So I mean, this is a way that they could make things happen. And for the comic reader like you or me or our fans, it would be non-disruptive, I guess is the best way to put it. But it wouldn't help the larger company. It would just continue to put them into a corner. And that's IDW's problem. Their decisions have all led them into a corner. It would be worth noting, IDW has Clover Press, which does operate independently from publishing. And so one thing you can do is to see them start to shift costs and books into that arm and use that as a way to kind of try and make their books make a little bit more sense. But there's a lot of optimism in his comments. He's hoping that things happen. But if you run a business, I mean, you and I both know, you never want to be in the position where you have only one path to success. And right now, IDW is increasingly in this place where they've got one way they can make it. And that way is a very, very tricky way.
Yeah, they've literally gone down this rabbit hole so far. They cannot come back without those streaming shows returning, on the investment that they put into them. And I don't see how it could happen at this point.
No, I think it's going to have to. It's going to have to change. I mean, the interesting part is they are, like any investor would say, what's your EBITDA? Do you have positive EBITDA? How is that tracking? Locke Key may get them there in second quarter, although unlikely. I mean, that's one show. That's one show on the back of this. So, and like you said, they're already splitting the revenue, but they're making a claim that in fiscal year 2021 they are going to achieve profitability in all of its three businesses. That would be incredibly difficult to do. And even then, profitability does not mean, hey, the company's perfect. Profitability means for the quarter, you have more profit, but behind you is still that debt and that interest, which probably topples the overall company performance.
Yeah, it feels dire from my end. I really appreciate you coming and adding some perspective to the numbers and having this conversation with me. I don't want to see IDW go anywhere. They provide a lot of good comics. And most importantly for me, they provide a lot of content aimed at children, which I think is very scarce on the market. And so I don't want to see them go. And it's just really sad news from my perspective.
It is. I think this is a company we want to succeed. I mean, as comic fans, all of us, we should want this to succeed. I think that a comic company that is independent of the big guys, who is trying to play with these entertainment holdings, is good. We need it. It can't all be Marvel and DC owning the streaming and entertainment vehicle with occasional things coming out from Image or Miller. This is a good thing that we should want to succeed. The challenge is it's just they're long in the tooth of trying to do this business now, and something has got to flip and change. So I hope things could go well. I do sense that kind of ominous statement, some restructuring may occur in 2020. I do see just a huge culling of their staff, and maybe that also helps things go off. They could sell off some of their properties, but this is a good company. I want it to succeed. I think we all do. So hopefully they can turn it around, but it's becoming more and more of a long shot.
Thank you very much for joining me, Perch. Not the news we wanted to talk about, but it's important, and I definitely wanted to present it to the viewers.
Yeah, I'm trying to come up with the happy ending to this story. The happy ending is that, as I said before we went on the air, I went back and I reread Locke Key. That's such a good series. It holds up. They have such good stuff in their pocket. Kill Locke, other things that they've done, like you recommended. I think there's some really good series there. So the comics will always be there for us. I guess we say that.
All right, later.
Later.
If you enjoyed this video, please give it a like. I would appreciate it very much. It helps us attract more views for the channel. Subscribe for future commentary, comic book news, and reviews. And don't forget to ring the bell for notifications. If you want to talk comics, movies, and much, much more, you can follow me on Twitter at Wes_from_TC. With that, Salamat Po, and I'm out.